welcome back to the Build a Trader YouTube channel. My name is Joshua, for those of you that do not know, and in this video we're going to be covering the high impact news events for the upcoming trading week, as well as doing some technical analysis on the pairs that we trade. This week we'll be analyzing gold, silver, the nasdaq 100, the S&P 500, US 30, as well as Bitcoin. As some of you may already know, I live out here in Seattle, and today the Mariners are playing against the Texas Rangers. We won the last two games the previous two nights. Hopefully we take it away today with a sweep. But without further ado, let's go ahead and start with upcoming news events for the week. Alrighty, so here we are, upcoming news for the week. Alrighty, so Sunday we have new loans for the Chinese yuan, medium impact news. Starting on Monday, 10 a.m., we have medium impact news for the US dollar. We have a FOMC member speaking, FOMC member Waller speaking, 10 a.m. Later that evening during Asia session, we have medium impact news for the Australian dollar, which is monetary policy meeting minutes. Later that evening, pre-London Open, we have high impact news for the Great British Pound, which is claimant count change, followed by average earnings index. Looks like for 3 months. Later in that trading session at 2 a.m., pre-New York Open, during the London-New York crossover, we have medium impact news for the Euro, which is German ZEW economic sentiment. What is this? ZEW stands for Zentrum für Europäische Wirtschaftsforschung. For those that want to know, that was a little bit of a struggle to say. I don't speak German, but hopefully I didn't butcher that too badly. Following that, we have high-impact news for the Canadian dollar, pre-New York Open at 5:30 a.m. We have consumer price index for the Canadian dollar, median CPI, trim CPI, and shortly after that, we have Empire State Manufacturing Index for the US dollar, which is medium impact news. Later that evening, during Asia session, we have GDP for the Chinese yuan, as well as retail sales data. Later that evening, pre-London Open, we have CPI for the Great British Pound, Consumer Price Index. For those of you that do not know, CPI is a measure of inflation. So when each of these major countries are having CPI data released for their currency, it is an overall measure of inflation for that particular currency and in that country. Wednesday, pre-New York Open, we have core retail sales for the US dollar, high impact news. An hour and 15 minutes after that, we have high impact news for the Canadian dollar, which is Bank of Canada monetary policy report and Bank of Canada rate statement. Shortly after that, we have Bank of Canada press conference, as well as Federal Chair Powell speaking at 10:30 a.m., which is high impact news for the US dollar. During Asia session, we have high impact news for the New Zealand dollar, which is consumer price index, followed by high impact news for the Australian dollar at 6:30 p.m., which is unemployment rates for Australia. Thursday, 5:15 a.m., pre-New York Open, we have high impact news for the euro, which is main refinancing rate and monetary policy statement. Shortly after that, high impact news for the US dollar, which is unemployment claims. And shortly after that, high impact news for the euro, which is European Central Bank press conference. We have a very busy week full of high impact to medium impact news events for every single major currency this week. However, we have no news on Friday, so Monday through Thursday, high impact news every single day during every single session, it looks like. Overall, this week is going to provide lots of opportunity to take advantage of, and looking forward to what's to come. Alrighty, let's head to the charts, and we'll start with gold. Alrighty, so we are on the gold chart here. On the right-hand side, we're going to start with the monthly time frame. Left-hand side, weekly time frame. We can see gold hit our overall take profit areas at $3,200, that $3,200 price range we were analyzing last week. We can see that the overall bullish trend is still intact. We hit a major low at the opening of last week, which we'll go ahead and dissect a little bit in a moment. But first, let's go ahead and update our technical areas. We need to update our previous week's low to where our low was last week, which is where this major wick was, where we have some major rejection. Then our previous week's high is going to be up here, which was a new all-time high as well. We can see that the market already is open and moving. We opened about an hour and 23 minutes ago. So normally I would have this uploaded before the market opens, but here we are. A little late, but still able to get an overall idea of what's going to happen for the week ahead. So we have our technicals updated. Let's go ahead and zoom in a little bit more on the left-hand side to the daily time frame. Alrighty, we have some support that price is reacting from on this current daily candle, which is the weekly open. We can see that it is reacting from our previous area of the overall take profit area we were looking at last week, which is 3,200. The next area we're looking at is 3,250 to 3,270. That price range, which is this green zone right above our all-time high that we just made last week. Let's zoom in a little more here and we can find some more details where we can take advantage of potential trade setups. So we can see there is a minor level of support that price is reacting from here. We can see on the higher time frame for the month that we are heavily bullish. So we need to be looking for areas where we can take buys from. So weekly time frame, we can see that if this short-term support breaks, where we have that blue line, this blue line where support currently is at 32.10 is currently holding. You can see we have some lower time frame structure on the 4-hour time frame right in this area here. This particular price range from 32.10 to 31.90. If 31.90 breaks and is unable to hold a support, we can see this previous resistance, which may act as support, around 31.50, where this gray zone to where this black line is. So 31.70 with an extreme low point at 31.35, 31.40 price range. Looking at this particular area to get retested potentially. So right here, potential buy setup. Might be able to go long from down here and take advantage of this potential move. This would be a 3R risk to reward trade. A really nice trade setup just based on the 4-hour time frame. If we look at the setup and take it from up here where price is currently reacting from at this lower time frame support, the risk to reward is still favorable and still targeting the same area, 32.50 to 32.70 price range. That would be a 1.5 risk reward ratio trade, but still overall favorable. This is the setup we're seeing for this week. Overall, should play out and is looking very probable. Going to set an alert at 31.70 just in the event we come down to this low point here. And I'm also going to set an alert at 3,200 just in case we retest this particular area. This would be a really nice entry point to take advantage of if we maintain the intraday time frame structure. So if we are able to move something like this, create a higher low down there, right where this green zone is, I'm about to turn it to a black zone real quick. There we go, much better. We may see price come down into here. We may get another bearish candle just on how price is currently moving. Another bearish candle that kind of prints down into this area, create a nice wick rejection down here, and then ultimately give us a nice bullish move higher. So both of these scenarios is what I'm looking at for gold this week. If price is able to extend above 32.70, we have price targets at 3,300 and even potentially up to 3,500 later this month or even next month. As long as the current environment stays the same, gold is going to keep on going higher and higher up until we get a shift on the higher time frame. So remember, the trend is your friend. Trade with the trend, and it's as simple as that. Next pair, silver. Silver, we need to update a little bit here. We are all over the place a bit. So let's go ahead and mark off our previous week's low and previous week's high. So last week we hit a major low point, which is this major area of demand down here. Sorry, not supply. Major area of demand, strong area of liquidity down here at 27.90, so right at $28, right below $28. This was a very strong area. Price reacted from very heavily and entirely reversed with a strong bullish candle. So now we'll move previous week's high to right here because this is our high from last week. Previous month's low is not entirely relevant, but that is what triggered this overall move essentially. Since we broke below the previous month's low, there was just a ton of bearish volume to keep pushing lower, as that was seen as a higher time frame break of structure. But as we can see, we took liquidity and entirely reversed and moved much higher. And now we're going to dissect to see what's coming next. So on the monthly time frame, we see a very strong wick rejection. This would be a liquidity sweep. Price came down to the extreme area, took liquidity down here, took a lot of buyers out, and then also once it flipped bullish, took a lot of buyers out as well. I'm sorry. And then when it flipped bullish, took a lot of sellers out as well. Absolutely liquidated them. This candle alone must have been absolutely insane to take advantage of and try to manage your positions in if you were in an active trade here. They had heavy bullish volume. Left hand side, we're going to be on the 12-hour time frame. We need to clean up some of these support and resistance areas, so we'll remove this one at 28.50. There we go. That looks a little better. We have an area of demand right here, around 29.80, 29.50. Price reacted from. We can see price open bearish for the week. Let's zoom into the weekly time frame on the right, 4-hour time frame on the left. The first major area I'd be looking at for this week would be right here at the $31 price point, $31.25 down to even $30.50. This area right here is going to be very interesting. On the weekly time frame, this might be where price comes to pull back and retest. And if you look at the 4-hour time frame, this is where previous resistance was, where structure was forming and price struggled to break above until we got these nice bullish candles to give us that volume to go higher. But right here, from where this blue line is to the bottom of this gray zone, I'm anticipating price to pull back down and then continue higher. If we are able to continue bullish momentum, we will be targeting the $34 price point up to $35 and maybe even $37 price range next month. As you can see, silver hasn't been moving quite the same as gold. Gold has had significant bullish volume. I know last week it opened bearish, similar to how silver did, but gold has vastly outperformed compared to silver here. So right here is the setup we're seeing. Potential buys at $31. Stop loss would be below this structure point where this higher low is. So 30.40, maybe even 30.35. That would be pretty safe. 30.35, targeting $34, which is the not previous week's high, but the high of 2 weeks ago. Targeting that high and potentially 35. So just this setup alone would be a 4.5 risk reward trade. If you extend it to the overall target we're seeing, would be nearly a 6R risk reward trade. So very, very good risk reward trade opportunity here for buys on silver. I'll be setting an alert at 31, and right where this blue line is at 31.20. Both of these would be ideal areas to look for a buy setup depending on how we get these lower time frame candles to form. If we start getting little bullish engulfings on the 3-minute, 5-minute, 15, we can begin to execute and make a tight stop loss once we get our confirmation. Next, we'll be looking at the US equities, US indices. So first, NASDAQ 100. Right hand side, we are already on the weekly time frame. Left hand side, we're on the 12-hour time frame. As you can see, last week we opened very, very bearish. Let's go ahead and mark off our previous week's low. I'm going to make this blue so it's easier to see. Much better. So last week, price opened heavily bearish, gapped all the way down, made a major low point at 16,334. As you can see, flip bullish. This week, we opened with no wick, just bullish volume. And now we're seeing some type of wick rejection here. We need to update some of these cycles, so let's move this particular area of resistance, which now may be acting as support from this particular area here. Let's mark this off as our previous week's low. We got our previous week's high right here. And I'm doing this markup with you guys in real time, as this is how I prepare my charts and prepare myself for the week ahead, and potentially spot any opportunities that may be forming in advance. So this is my process, and this is why I'm showing you, so that you can use this for your own process as well, so that you can also learn how to prepare on your own for the upcoming trading week. Let's zoom into the 4-hour. So we have a really strong level of support right here where all these wick rejections are. $18,250 price range. If this weekly low breaks right here, this candle, if the low of this weekly candle breaks, we could potentially see this area get retested, 18,250, and then a move higher up to maybe the 20,000 point for the NASDAQ, right where this blue zone is. On the weekly time frame, that would be the high from 3 weeks ago, this particular area of supply. Yeah, it almost looks like it's coming straight to there, actually, if I'm being honest. If we zoom out to the monthly time frame, heavy seller's exhaustion, major wick rejection. Buyers step again, bought the major low point, took liquidity, made it seem like monthly structure was broken and looked heavily bearish. And then buyers stepped in to buy the low. Obviously, there was some market manipulation that went on at this period of time, but that's just how it is. And that is what happens for these areas of liquidity to be taken. It's market manipulation. It gets driven to these extreme areas, and then after that, the market starts to move in the direction that everyone was anticipating or previously analyzing. This happens every day on either a small scale or a major scale, depending on what time frame you're looking at. All right, sorry about that. Camera had died. But overall, that's essentially what happens. Liquidity is taken, driven to particular areas in the market, and then overall price is reversed. But here we can see a potential buy setup if price wants to come down and retest this area. Otherwise, it's just going to keep pushing bullish with the overall momentum and volume that it currently has. So this is the move here. If we were to take buys close to the area or price we're currently at, stop loss below this range, this would be a 1.2 risk reward trade setup. If price wants to come down, retest this area, and then continue higher, same stop loss, same take profit. This would be nearly a 4.5 risk reward trade setup. So it would be a little more favorable to take advantage of if it comes down to the area of support / demand. But overall, still looking to climb higher. Next, we'll be looking at the US 30 here. We need to update this chart as it's been a little bit since I have actually done an analysis on this, but we can see last week open heavily bearish. Same thing, swept liquidity, made it seem like higher time frame structure was broken, and then ultimately reversed. And ultimately looking to keep going higher this week. We can see that price opened bearish to start the week, but is looking to keep climbing higher. We can see that last week we closed with a strong bullish candle on the 12-hour time frame. Let's go ahead and mark off our previous week's low real quick. And next, previous week's high. It's important to know and map out your price ranges from the previous week to understand where structure lies on the intraday and lower time frames, and to see where price can go higher and to see where price may be headed to if those areas are broken, which is why we mark those areas off. They are also areas of liquidity. All right, so right here, yeah, we'll keep this here. This is a major area. We can see price had a little pullback and is looking to continue climbing higher. So right now, let's zoom into the left, or on the left side, let's zoom into the 4-hour time frame. We can see good, strong, bullish structure here. This would be the setup we could take advantage of. Potential buys up to this area of resistance at 41,800. Stop loss would be below this low here at 30, 40. This would be a 1.2 risk reward trade, but this would be in line with the current trend. It would just be a bullish momentum trade. It should just push straight up. That'd be the short-term trade setup that I'm seeing. Overall for the week though, we are targeting 41,800 as the short-term area of resistance, and if that breaks, we may continue climbing up to the all-time high and make a new high at nearly 46,000, or at the 46,000 price point. But overall, still looking bullish. The structure has shifted from the prior weeks, so it is no longer bearish price action. This is looking to be a buyer's market and is looking to continue trending higher if we can break above this area of resistance. If we are able to, then there's a very clear range all the way back up to the all-time high and potentially higher. Next, the S&P 500. Same thing, all US indices, the equities all had very similar price action across the board last week. But same thing, took liquidity, swept the major low, and then reversed to move bullish. We're seeing similar structure on the daily time frame as we saw with the US 30. Let's zoom into the 12-hour time frame. Yeah, we can see this area here is looking just to act as support and as current bullish structure on the lower time frame and looking to drive higher. So our first area that would be targeting is 46.60. This area of resistance here, stop loss below this bullish candle. This would be a 1 to 2 risk to reward, or potentially better if you were to buy right here, 53.30. Just how this risk reward setup is, or risk reward tool is, this is the setup I'm seeing currently. Looking to trend higher throughout this week, and it really depends if we can break above this resistance or not. This major level at 56.70 will be a key factor in determining if price will keep moving bullish or reverse and go bearish. But overall, based on the higher time frame, we are seeing strong signs of a buyer's market. This was at the extreme end, the extreme low, and overall on the intraday time frames, we're seeing bullish structure. Overall, this would be a great time to still buy and should be in line with the overall market now. Shouldn't really see too much drawdown. I believe that period is over. But I don't really trade the S&P 500. This would be more so for an overall analysis. But if you do trade this pair, this is the setup. buy 5,400, stop loss 5,150, targeting 5,660 is what I would do here, which is a 1-to-1 risk reward ratio, but overall it should just go straight up. Last but not least, Bitcoin. Bitcoin has been pretty wild lately, just really consolidating this area between 88,000 and 77,000. We had an extreme low of 75K last week, just below 75K. That may have been the yearly low. Based on how price reacted, let's clear up some of these support and resistance levels as this is just consolidation. We can see we're just playing in this range here. So if this is the yearly low, which to me is what I'm thinking, this is lining up with my analysis over the last few months. I've been targeting this area as where price may go to. Now, it could go lower down to 70,000, even 60,000, but based on how we're looking on the monthly time frame, this is the price action we want to see. On the weekly time frame, we have strong bullish engulfing candles so far. We have less than 12 minutes to go before this weekly candle closes, but this is what we would want to see for a potential reversal. If we get a pullback next week, down to maybe 80,000, or maybe even the support, hit the support, go a little bit below, could see price line back up with our overall bullish trend and continue higher. If we do get a pullback here, there's a very clear range up to 100,000 right to this point here. We would have to break above 88,000, this resistance. But if we do, it's just going to keep flying, just as it was a few months ago. So this would be a potential setup that we're seeing here. This could be a good swing trade, or if you are just trying to intraday trade it, you could target 88,000. But this would be a good swing trade setup from current prices, potential pullback to 80,000, 78,000, and then just hold until the trade plays out or until you're stopped out. But this is a good opportunity here. If price does break below this point of 75,000, then we have 70,000, 60,000, but overall, I believe this is the turning point here. Bitcoin is still targeting 120,000 as the higher time frame target, and currently market looks like it has shifted to be a bullish market once again. But we'll see here. We'll see how this candle closes in the next 10 minutes, as well as how this week plays out. But this is looking exciting. As I said a little bit ago, my camera had died, so now I have to switch to this camera to record. It is what it is. I just want to say thanks for sticking around and supporting my channel. Thanks for watching this video. Go ahead and follow me on Instagram, TikTok, X. If you've not already joined, go ahead and check out my free Telegram channel. Link is in the video description. I send signals as well as updated analysis and news and motivation to help keep you going through the tough times that your trading journey will have. Hope you all have a great weekend. Looking forward to the upcoming week, and hope you all trade safe, trade profitably. And I'll see you all in the next one. Peace.